Hello, everyone, and welcome back to the Power of Three Trading YouTube channel. As you can see, we're already in a trade. I forgot to press the button to start recording the trade, but we're in it, so here we go. What we're trading today is the ICT market maker sell model. We're going to go over some of the steps and how I came to that conclusion, why I traded this, and ultimately you're going to see the execution of it hit my take profit, and I'm excited to show you this today. So I posted a video yesterday about the long-term strategy of this ICT market maker sell model. This is a intraday market maker sell model, and on the screen you're going to see me take a measurement of how far below the blue line or the relative equal lows that you see right there, how far it can go below that price swing. And you see me set my take profit there. I try to take partials, but my account's not large enough in order to take partials, so I'm gonna have to take the full profit. I like to take short, small profits as I go along. That way, I guarantee that I'm profitable in my trades. Just part of my risk management tools that I use. But you're going to see me take the full profit here. This is the account that I use specifically for YouTube. And what you're going to see here is I'm marking out a bearish order block. What this is a area where orders are being paired with buy orders and sell orders, and we're going to want to see price support that structure. You'll see me probably mark out a few more as we go along, but essentially what we have happening is we have a 15-minute order block, a higher time frame order block. It comes back, it fills that order block. We take out relative equal highs from Monday, and now we're in that market maker sell model where we have a break of structure intraday, and then we also have a smart money reversal. And what we're trading is a smaller fractal of that, larger fractal. This larger price swing that you're going to see to the left hand side, we're just trading the smaller retracement of that. But inside of it, we have a market maker sell model where you see the market run up higher into the orange and gray shaded area, and then we have a failure swing, and we are catching the first price leg right here. That's where I entered a trade. We're seeing some displacement to the downside, which is a good sign, and ultimately, I'm pretty confident that we're going to hit our take profit here. This is a pretty easy bread and butter uh, setup. I like to use the market maker sell model for pretty much any of my trades. That's how I set it up. That's how I frame it in my mind. And then I use ICT's PD arrays to help support that idea. Um, what you just saw on the screen is we just bounced off of that order block, that black line that I drew out, essentially where my trade started on that red line. Um, those two up close candles are an order block. So we want to see price support it, and I'm going to mark out another order block right there. And price should support that level. And essentially, what is happening there is order blocks are where institutions can pair buy and sell orders, meaning that if they want to continue going short, that is an area that is a very good place to get into the marketplace, very good place to place a trade. Um, and place an order. So we want to trade like the institutions. So that's what we are doing. Those order blocks should support each other, and we should see price continually move to the downside. It's okay if it comes back up into those order blocks because that just means that it's gaining more orders to move lower. As you can see, I just moved my stop loss. We're trailing our stop loss to make sure that we manage our risk effectively, and I just brought it down to the very tip top of that order block. If it comes back and hits my stop loss, I'm still in a negative, but at least it's not as much as my original risk was. So we're de-risking while trying to see if price supports itself and then trail our risk as we go lower so that we can uh, ultimately stay profitable even if our trade doesn't hit our full take profit. Those two candles right there, that's going to be our next order block. We should see price displace down to the relative equal lows that I'm showing right here. Now I have that projection on there. You don't have to worry about that. That's just for a reference for me of where we're at in the day. This is on a 1 minute time frame. So each one of these candles is a 1 minute candle. Order blocks, any of ICT's PD arrays, they're essentially algorithmic data points. Now, if you think about that in time, you can have a lot of different data points throughout a time-based setup or a model, and that's essentially what PD arrays are. They're not specific to a specific time frame. They will happen on every time frame, and so you can use them to set up higher time frame PD arrays to help you form these kind of smaller trades, these scalps. We're going to take a look at the three sisters here, the S&P 500, the NASDAQ, and the Dow Jones. They're all in agreement with this trade. I'm just checking to make sure that we're on the right side of the trade. Price is supporting itself on all three indices, as you can see. S&P 500 is moving lower, NASDAQ's moving lower, and then we are getting a small consolidation on the Dow Jones, which is okay. There's liquidity below that, and essentially that's where we're headed. So now we're just going to watch these PD arrays, these order blocks, support itself. As you can see, it came back up into that black line and is now displacing down to the downside towards our ultimate objective. What you really want to see in price action is a displacement. So displacement meaning that you want to see a big candle or a group of candles move towards your objective after it hits those order blocks. And you get that in this video. You'll see a couple times where these order blocks are supporting price. Right where that black line is, you can see that price came up into it, tapped into that black line, up into it, and then rejected it. Not very much. We want to see either a consolidation here and then a move down lower. All this is just kind of gaining orders as well. This is a high probability area where they would want to pair orders to move to the downside. And what we're looking for essentially, and this is the way that I like to view the marketplaces, is when the market has smooth lows or smooth highs, that's what we want to target. Right here, I'm showing how price is supporting itself, comes down, hits the order blocks, and then ultimately we're going to get a consolidation is what I'm thinking, and a retracement lower down into our objective. And the reason why I want to target these smooth areas in the marketplace is because above those or below those smooth areas is a liquidity pool. And these two lows, with the blue line that says REL, those are relative equal lows. Below that is a liquidity pool, and the purple line below that is the midnight opening price. So ultimately, our draw on liquidity is below the midnight opening price. But for sake of time, and for me to kind of explain and show this market maker sell model in action, we're just going to target these relative equal lows, and we'll call that a day. This isn't a very big account. I'm trading with two micro contracts on the NASDAQ. So each contract, each dollar move in the NASDAQ is worth $2. So it's not a lot of money to be made on the stock market, but for the sake of this video and the YouTube channel, that's what we'll use. I just showed you that the market is open, and that's my profit and loss so far. I took a withdrawal yesterday, so I was up to $1,000. Now I withdrew about 200. So we're gonna see if we can make some of that back and then grow this account. We're currently up about 95, moving towards $100. I haven't trailed my risk yet. My stop loss, the yellow line, I want to see price move lower and displace lower. Marking out an order block now. Price should not move above the top of that candle. We should see a continual move lower. And I like what we're seeing here. We're going to see a displacement lower, may see one more retracement before ultimately reaches our goal. So in the market maker sell model, where we're at is we're just exiting the first consolidation. Now I'm going to trail my stop loss because that's displacing lower. And now no matter what, if the trade comes back and reverses on us, we are in take profit. It's not very much. It's $33, but a win is a win. That's money in my pocket. So I trailed my stop loss above the original consolidation order block just in case it came back up to soak up more orders. And I'm guessing that we'll see a retracement back into that order block, and then we're going to move lower down to our objective. Where we're at in the market maker sell model right now is this is the second leg of distribution. This is a very high probability area to be trading in. I really like that. Just measuring out the order block that I see here on the other side. This is a bullish order block. What I want to see is price move below that midpoint and then stay below that midpoint. I don't want it to come back and reverse on us. That could be an area of reversal if this is not going to take out those relative equal lows. So that's what I'm watching right now. We're building another order block right here. This green up close candle. If this closes green, we may see another up close green candle creating a order block. If I see that, then I'll probably trail my stop loss below the consolidation where that black line is. We're just going to watch price here. Yep, we're going to come back up towards that order block. We have a small fair value gap right there that I'm going to mark out. This is just a area in price, kind of like imagine a fair value gap like a paint roller. If you're rolling paint on a wall, this is a place where price has gaps, and it needs to fill those gaps in order to deliver price efficiently. So it came up into that fair value gap. We're seeing that. Now we're going to see hopefully a move lower below the midpoint of that black candle that I marked out previously. Yep, we're just going to measure that again. Make sure I get a level here at 16,975. And what I want to see is price move below that. I don't want to see it kind of dilly-dally around that area and not move. I want to see a move lower and then stay below that low. It's okay if a wick comes back up into it, but if we see a body of a candle break above that, and this is what we're wanting to see. Yep. Prices, I'm going to move my stop loss lower. So now we're automatically $82 in profit. We're de-risking. We're making sure that we're going to be profitable on this trade. And then I'm going to move my stop or my take profit to a level below this, those relative equal lows. We're going to get a little bit more profit, and it's a logical level of a liquidity sweep if we're going to sweep in reverse. But I don't think that we're going to do that. I think we're going to continue towards the midnight opening price and below that because we are ultimately in the higher time frame on a market maker sell model. And this is just a lower time frame, a 1 minute market maker sell model. So I'm going to trail this a little bit tighter below that fair value gap because price shouldn't come back into that fair value gap. It's already done its job. So if it comes back, that's a failed PD array or a failed data point, and we could potentially see it move higher on the day. But that automatically guarantees us $111 in profit, which is not too bad on a very, very small trading account, less than $1,000. We're making sure that we take profit no matter what, de-risking. There's zero risk on this trade now. Essentially, we're going to either hit the 111, which I don't think we're going to do. I think price is going to support itself, We move below that 50% level of that bearish or bullish order block, that black line, and we don't want to see a candle body close above that. If it closes above that, I may close the trade. I'm just showing you that this is a live trade right here, so I'm not going to close the trade. I'm just showing you that this is a live trade. This is not a simulation. This is real money. But if you want to use this as trading advice, it's already in the past, so you can't really use this as a trade idea. But these concepts are very real. They happen every single day. If you want to learn more about ICT and how I learned how to trade, go to his YouTube channel at theinnercircletrader.com, and he posts all of his content that I use here for free on YouTube. Marking out another order block here. And if price moves lower, I want to see a displacement lower, and we'll trail our stop loss below that order block. Seeing an order block form here, come back up into that order block. We don't want to trail our stop loss too much. I did just move it a little bit more just to see if we can squeak out a little more profit in case it reverses here. I don't think it will. I think we're going to pound through that relative equal lows. So you can see price come up into that order block. It should stop around here. I don't think it's going to go any higher. Yep. And then now we should see candle closes lower. We really shouldn't see any candle close higher. In the next 5 candles or so, we should see the trade pan out. I have time and price on my hand. Usually what happens around 12 o'clock in the indice market is you're going to see a run on stops. So everybody who is long or short for the morning run, they're trailing their stops. They're seeing if they can squeak out more money. And ultimately, what we're playing at here is below those relative equal lows. That's where people have a logical level of support and resistance who are in the retail world. And what we're saying is we are against retail theory, and we're going to attack their stop loss and soak up that liquidity just like a interbank trader would. None of the concepts that we use are going to be found in a book. They're all for free on ICT's YouTube channel. And what I'm marking out here now is a time kill zone. These are essentially mini kill zones within the middle of the day. The larger ones are where we like to enter trades, and we entered in the middle trade. Yep, and that's what I'm showing you here. You have a smart money reversal, and then we trade in the middle one. And ultimately, our take profit should be hit in the final large black to red line. That's where time and price comes in. ICT talks about how time and price blend together, and this is an advanced concept that he doesn't necessarily teach for free on YouTube, but it's something that I came across and I use in my trading now. So I'm going to trail my stop loss just a little bit more because we rejected off that order block. And here we go. We're about there. This is how trading goes. Just submit to time, and we should see maybe a little bit of a retracement here after it hits that relative equal low. It just bounced off of it barely. Once again, I'm just showing you that this is a live trade, and we barely hit that level, barely. But we're waiting for it to smash and trade to and through that level to the level that I have as my take profit. So I'm going to trail this stop loss a little bit more to that order block. And now we're in $145 of profit, even if the trade reverses right here. I don't think it will again. I think we're going to smash through that take profit. Especially in this candle or the next candle, we really should see a displacement lower. meaning the candle body should be large, and we should see a quick move lower if we're going to take out our ultimate take profit. And it has to break below that. I want to see a candle body close below that. I don't want to see a wicket. Um, we're not playing the wick game. We're playing the body game with the candles, and that's what we want to see. And this just took our take profit. Just had That's a wonderful trade. That is a 1 minute market maker sell model, and you can see that market maker sell model in action right there. Ultimately, we're looking for that order block. Here's a little tidbit. I could have reached for that, but I went for some low hanging fruit. Usually, what you'll see with a order block is you're going to see a move of 2 to 3 times the order block. And I'm going to show you that right here. This is a concept that ICT teaches. So from the high to the low of the candle, you're going to see a move of 2 to 3 deviations. And ultimately, that's what we get. We get a move of 3, a little bit more, and then we get a move lower for the market maker sell model on a 1 minute time frame. There should be an order block. I'll show you the order block here for the downside for the move of 2 of 3. And right here, you're going to see that move of 3 right there, which we just hit, which is the very top of that bullish order block right there. That's precision that you are not going to find in any trading book or any trading course. Never ever are you going to find that. Let me show you the fib. This is kind of a confluence of levels, and let me draw that out right here. So that 1.27 and 0.35, we could have squeaked it out a little bit more, I think. We're going to see price trade down to that level, and again towards the midnight opening price. But we took low-hanging fruit. We ultimately had an objective that we hit. Let me get this deviation a little bit better. There we go. So that 1.27 on the fib, and then the projection of 0.35, that's a high confluence level. Ultimately, price should trade down into that level. We could have squeaked out a little bit more profit, but for a small account, we took low-hanging fruit and we won our trade. We took a win, and that's the market maker sell model in action. This is how I frame almost every single one of my trades. And it's a very powerful tool because very powerful model because ultimately this is how the markets move. It's not a buy or sell, support and resistance, retail, any retail theory, Wyckoff, or buying and selling pressure. That's not what this is. I'm looking at maybe a retracement back in to get into another trade, but that may be for another video. We'll mark this level out. That's a rejection block. Take some of these smaller levels off, and you can see price is running. It's going lower. All this is a market maker sell model. It just has to go through all of this, and ultimately the liquidity resting below that low is what we're aiming for. Yeah, I hope that you enjoyed the video. Please leave a like and comment if you like what you see. Let me know if there's something that you'd like me to do or to show you on this YouTube channel, and I'd love to make a video on it. Thanks, everybody. Have a great day. Bye.